night. All right, okay.
Go for it, I'm recording.
Yeah, sweet man. Everyone, please mute yourself. We will get this started. Okay. So to the new people that came, welcome. So these are the topics that we have: the topic 1, topic 2, topic 3, topic 4. So we're in our 4th week now. So we're going over high time frame plus low time frame ranges, sub ranges, session high / low, equilibrium, premium discount. So assuming a lot of for the past few weeks we've actually been showing these high time frame, low time frame sub ranges. Session high and low, we haven't really gone in too much detail, but it's pretty simple. Equilibrium, premium, and discounts. From you guys coming from SMC, you should know that already. So topic 1 was in the topic 1 to 3 we've covered already in the first 3 weeks. So for the new people, if you have any questions regarding it, please send them through on the FAQ or the question board itself. So high time frame plus low time frame ranges. The question is, what is a range? What do we see? What do we personally see? What do we consider a range, and how do we see a range? So for us, we keep it simple. When price sell to buy, this is if price is continually making a move like that, this is a range. Well, this is a range here, but price normally leaves a range, and then this is your potentially your sub range here. So let's actually clear that up a bit. So a range is basically your sell to buy, and then when it starts moving back down, this is your 2 price levels. So for example, this will be a 1.2 and 1.22. So these are your price range to keep it simple. So I mean, with this here within sorry, let me actually so that will be your sell to buy, and then when it starts making your defined high and your defined low, that's your range there. So let's actually go into detail. Give me 2 sets, guys. I'm actually just gonna sorry guys, just gonna quickly pop this up. Sweet. Can you guys see my screen now?
Yes, we can see. I can see your screen.
All right,
Yep.
sweet. All right. Yeah. So basically, what you're seeing right now is your buy to sell, and this is now your defined low here, your defined high. So this is what you see on a higher time frame when you see that buy to sell. And look at when price comes into this, it starts to show momentum shift, continue lower. So this is your, let me actually choose the right color for this. This is your high time frame selling range. So do you guys understand that why? Would you define a high time frame range? Once there's the momentum shift. Yes, yeah. So once so for example, this low here, once the momentum shift occurred, so this is potentially can pull this liquidity saying here can potentially pull in into that. But at the same time, knowing that we have sub ranges within sub ranges to see how price reacts to every single point. But again, knowing that we had a momentum shift down here, we expect that we look at this as liquidity to see when all your lows are getting protected. Do you understand that? Momentum shift or no timing? Yes, yeah. Does that clear that, Nick? Okay, so you have your selling range, your high time frame selling range. So within this, when you see on the 1 minute, you can see how price moves up and moves down, then it creates that range, and then price initiates out, and then after that mitigate. So this is your sub range sell. When price is creating the low here, you can see how your buy to sell here is now your, and then it starts pulling back. So this is now becomes your sub range of your lower time frame. You guys understand that? Yeah, okay, sweet. So notice how price moved and then create another buy to sell, and it starts pulling back. So this is your reference point here for your last activity that occurred. And now this is considered your sell range here. For your, this is what you call, this is basically flow mitigations, as we've all known. Well, the last topic we've mentioned already about flow mitigation. So these are my favorite plays entering at these regions here. And your third one here is your sub range here. You had that buy and sell, and this is another sub range here, another sub range here, another sub range here. And notice that this, what do you guys see here? You see price does not respect this buy to sell. So your question is, when price does that, you're gonna ask yourself, like, what did this mitigate here, and why do we have such aggression? And look at the liquidity that was built prior to it. So we ask ourselves that, and the liquidity that gets built is stacked too. And when you look at to the left, we expect that this to be liquidity, but at the same time, we want to know how price reacts, and how price, when price is moving along in this manner here, we want to see how price reacts to these certain regions. Are we gonna pull back, or are we gonna say, for example, it comes to this, are we gonna react and this liquidity will get swept to then potentially take a hedge if we were in a buy down here? Can we do that? So this is the things that we come prepare for. We have these scenarios presented to ourselves already. So now you understand. Now you understand the sell ranges, the sub sell ranges. This is now potentially your buy range here. Let me actually. So these are your buy ranges here. This is the opposite of it. Your sell to buy, you can see how price moves. So these, when you see a momentum shift, these are your potential continuation entries that you can enter. So when price likes to stay in pockets of prices, we call, I personally call these like pockets of activity, where they contain two price levels. So say this was a 1.2 22, and this is like 1.2 23. They just contain between two price levels, and the activity that they needed, the activity that they need to protect is the low that they sold to then buy. So that's how we get this sub ranges to be presented to us. So once you get up to these level here, you ask yourself why do we have that aggression? Why do we not protect? Actually change the color here. Why do we not protect this low here? What did it attack? This whole buy to sell, right? That caused that aggression low, and we come into your premium of the price. So when you see that, you wanna look for that aggression, which it did give it. And now, what sub range do we have now? You have this sell sub range here. This whole buy to sell, and now that gets mitigated. And within that, we have this another sell sub range, another sell sub range. So once you see that aggression, this is potentially your entry on this region, because now you know that you come into that premium range and you see that aggression, and now you're left, look to the left to make sure that liquidity and the void here created for your reasons for your price to start heading lower. Or again, just catching these continuations. Let me actually draw that again. So this is another sell sub range here. Another sell sub range here. You guys understand that? The sell sub ranges, the buy to sell, sell sub range here, and price move really fast. And this never actually mitigate too. So this is there's no entry here. So this is a potential. I mean, now you're coming into the discount. No, just know that you're coming into the discount. And you want to see if this edge money, this is where we call edge money on this region here. I mean, both valid here. Why do we call it edge? It's basically the edge of the range, the higher time frame range. It can be edge of the sub ranges too, like this here, the edge of this. Like when we say edge, we're prepared for it. Where I get confused is when there's a buy range and a sell range at the same time. I guess the answer is to play both and hedge. There you go, man. The answer is to hedge. Yeah. But with hedging, make sure that you know the higher time frame too, and make sure it's a solid hedge. So if you do hedge, you do lose one, and you win one. Like E today on high time frame and NFT. Yeah. I mean, I'll go into make sure both get tapped in. Yeah. Like yes, I hedge a lot all the time. Yeah, the H4 and the M15. I know which one you're talking about. Once you do see, I think that area. I think I'll jump onto this after. I'll run through this so to make sure that everyone actually understand this. So once price comes to the edge, what do you want to see? You just want to see the price behavior change, like what we're seeing when it comes to this region here. Are we seeing the liquidity takeout? And look at the low that cannot be taken out. What do we have after that? We have that aggression. Is this now become liquidity? Yeah, this is now potentially become liquidity. It gets mitigated and continue. So now this is your potential buy ranges here. So these are your low time frame sub ranges as well. And ranges is it can get pretty messy, but understand that if you know where to place your range, like this is your buy range now, because this create that high, and you had that momentum shift here, and you had that sell to buy, and so now this is your buy range that you can play. and the liquidity is sitting up here to get targeted. I hope that makes sense for the ranges. Have you guys got any questions regarding this? I guess not. Clear, sweet. Maybe just some examples. How could you? Okay, yeah. I'll be moving on to examples after this. Just want to make sure that the backbone of this is pretty clear. I found something really arranged by a move, not always edge, but that's the way it is, I guess. Yeah, it's not always the edge. It's sometimes 52. It all depends where banks want to protect it. It's not always 50. So we just, again, that's simply your equilibrium. So you have your premium, discount, and equilibrium. So these are the areas, like when you come into this region here and the equilibrium, you want to see what kind of activity we have. We do see equilibrium to get respected, and we see a momentum shift. Yeah, we can play it. But edge does have a high probability. Yeah, it does. It coming because it tends to banks is trying to get the cheapest price that they want. We just follow what they want, and when they show it, we follow it. That's it. That's what we do. And once they show that aggression here, we simply just find our sub ranges. We then just follow it. So now it becomes liquidity. Hope that it's not that messy. Let me actually. The green ring starts from the sell to. Yeah. Hey, what's up, man?
See in this example, you've drawn your larger.
Can you hear me?
Sorry.
Yeah. Can you hear me? Yeah.
Yeah. See in this example, you've drawn your larger buy range that you just deleted. Does
sorry.
that not have to? You're good. Does that not have to break that previous bearish range to make it a buying range?
Sorry. So this is where a range, a low time frame range, because price can just bounce back up. So price can actually bounce there and just keep wedging itself like that.
Yeah.
You understand?
Yeah. Happens a lot.
Yeah. So if price does come into this, it happens. It does happen a lot. So this is your the edge of the range, right? When it comes into this price. So we see the sell to buy, and you can see how you had your defined high here and your defined low here, and see that momentum shift. So now you can establish a range.
Okay, yeah. So it doesn't have to necessarily break
price
any
does come into
structure.
Yeah. And then when price does come into the edge and you see this aggression, you know where you are now. And you see this liquidity sitting there. And what do you do next? You find a pocket of activity that they create. Your sell to buy to mitigate. Your basically confirmation plays, because now you can potentially target all the way up to this region here potentially, because now in turn has become a weak high.
Yeah, or liquidity as well.
So this can potentially, but make sure that and all this liquidity is in here. So make sure every low that low gets respected. Again, the best time is when price moves is around the closer to the session time. We see 30 to 50 pip moves around that time pretty easily. So I hope that clears it.
That definitely clears it up. Thank you.
Yeah, no worries, man. No worries. The green range starts from the sell to buy on the bottom left, right? Are you talking about the big range, Vic? The one you just drew. So this one, so this whole range here, let me actually draw it. Sorry. We'll draw that
Yeah, sorry, that one, yeah.
properly.
Sorry, can you hear?
Yeah. So
Apologies, could you
do
hear me there?
understand this, or do you want me to? Yeah. Do you understand this, or do you need some clarification regarding this?
No, this seems fine. I was gonna ask if we could have a look at a quick example on the live chart, looking at current price.
Yeah. We'll move on to live examples or just examples on the chart. When price breaks
Perfect.
the high of the buy range, does it leave a void we can target later, or does the new range made that void irrelevant? When price breaks the high of the buy range without meeting in the low buy range, decide together, does it leave a void? Sorry, Mateo. Just not. Can you unmute yourself and just explain? Let's read the high of the buy. Hello. Can you hear me? Mateo, are you there?
Yeah, my bad. My Wi-Fi was tripping.
No worries, man. No worries. Yeah.
I
So,
was saying,
what do you? Yeah.
So
Just
let's say,
just annotate, please, if you can.
yeah, I don't.
Yeah. Are you still
I'm not sure how to annotate, but I can explain. I can explain it.
Okay, go. Yeah, go on, please.
Yeah. Okay. So you see where you have P, right? Before the price starts going downwards to the edge.
Is it this one?
Yeah, where just the diagram you have of price when it goes down. That's like where you have your buy range when it does the momentum shift.
Yeah, this area here. Yeah, you're talking about this area.
So
here.
let's say price didn't go all the way down there. Let's say it went to like just took only a little bit of the liquidity and then it broke that high of that buy range. Would it leave a void that we could come back to later, like target later as a point of interest, or would it be irrelevant because we have
it'll be a future
new range?
Yeah. So any like void is always any liquidity that gets built is always for future price. So if you say you said price starts moving, starts breaking out here, is that what you're trying to say?
Yeah.
Price starts breaking out here. Yeah. If price does starts breaking out there, and in the future we start protecting all your highs, the void that gets left here can just get run through pretty fast. And you making sure that all your highs get protected to continue to fill the void. Do you understand that?
Yeah, I understand. That was my question. Yeah, that was.
Yeah. So any void or it's always for future price. So this is a void for future price and liquidity built for higher prices as well. So this drawing is getting messy. apologies. I hope that makes sense. And we'll move on to
it does.
the chart
Thank
example.
You. Thank you.
Yeah, no worries, man. No worries. To show you, however, may require to show. Yeah, sure. I'll quickly. Sorry, give me 2 seconds. Yeah. Sorry, can you guys see my screen now?
Yes,
Yeah,
can
sweet.
see it.
Yeah, sweet. I'll put M. Where are you? M. Michael.
Cheers.
Yeah, no worries, man. Just shoot it through. Just want to see what your question is.
Cool. It should I guess be a good example for you guys as well, because I think you'll probably go.
Yeah,
it
might
was
be useful.
It was based on last night's price action. So can you guys see my screen now?
Yeah, I can see your screen now. Yeah.
Cool. So I think the market opened here last night.
Yeah. Yeah.
And then I was obviously looking at high time frame intentions, but I think I was looking at this range just for the basis of obviously what we're looking at. I saw that we were kind of currently in a bearish order flow here. So as I saw that obviously it broke this range, I haven't drawn it, but I saw that the next range that was formed was around here.
Okay.
Where price was trapped between this point where it rejected and then start coming up. So I tend to start looking at it like this and see, okay, if it's going to come into premium prices.
Okay. Yeah.
Hopefully, correct me if I'm wrong. Obviously, if I've drawn this wrong, or a way of looking at this, and hopefully to help others as well as myself. I saw that it.
Yeah. Sorry. What you're saying, this is correct. Yeah, but see this buy to sell here.
Yeah.
This is your sub range within it.
Yeah.
So it did come into the premium.
Yeah. So it literally. So for example, because sometimes I will look at this, but then I'll also look at any unmitigated. But obviously, there was just a void period, I guess, here. Of inefficiency that it just tapped into, and then shot down out of the range, creating this new range here. And then I noticed it did come back up here to obviously come back again into premium prices and mitigate, I guess, this sort of buy to sell area.
Buy to sell. Yeah.
Because I don't think I wouldn't have been able to probably catch it here personally myself. So then obviously when it came out here, I guess this would have been an opportunity. Is there anything that you would do differently in that?
This is perfectly fine. Because when price tap into, I mean, this is on a 5-minute point of view, right?
Yeah.
I think 50-minute would be a better a POV of this.
Okay.
So, I mean, it's the same thing. It's the same data anyways, but it's just a more larger view of it. Yeah. So once I know that this, can you see this? Let me actually change the color to yellow. Yeah, you guys can see this buy to sell. Yeah. So this is I define this as my sub range, but you're right as well for defining this high and this low. Again, that came into like equilibrium area anyways of that whole range. So that makes sense. Yeah. So with this the buy to sell and it starts to reverse correctly identified, you've got a fat void here, so expect that to be filled. Liquidity here, so you do want to see any momentum shift, lower time frame momentum shift occurring there to then potentially target liquidity down here. So this is on a 50-minute point of view, but I think the 1 hour will be a better POV for this, because the more you zoom out, the better, the clearer it becomes to where your next high time frame mitigation is. Like this is a void to then get tap into this unmitigated buy to sell. Yeah. So that gives the reason for the buy to come up to here, mitigate, and you had that V shape, that wick showing that V shape, and then any lower time frame mitigations here are potentially entries to then target the unmitigated sell to buy around this region here, and you refined it to this. So yesterday I was actually in a call with one of the guys. I was mentioning how you could potentially see a sell, fill the voids, and target liquidity underneath here, and then look for buys around this region, just because we had unmitigated money around here. So can you actually go on the 1 hour?
Oh, 1 hour. Oh,
okay.
Yeah.
Yeah. So see, the 1 hour actually gives you a clear, better picture of like what high time frame void. So are we surprised to see this void getting filled? Not really, because your height, the low time frame flow was high got maintained
Yeah.
and targeted the sell to buy in this region here.
Yeah.
And your job was to just look for momentum shift around that region and start playing the longs, because now this in turns become liquidity. And you can see they create that sub range here to sell to buy. See that?
Yeah.
Yeah, and then that got mitigated to continue higher. I think that was the New York, was it? The New York region.
Which what, down here or up here? I think up
yeah,
here.
this year.
Yeah, this was New York.
This New York.
Yeah.
Yeah. New York was funny. New York was funny for sure. Yeah.
Cheers. Thanks.
I hope that. Yeah, no worries, man. I hope that clears it.
No, definitely does. It does.
Yeah, no worries, man. No worries.
Guys,
Yeah,
for
New
me,
York was
I would have used the same range that that Mike would put up there. So I wouldn't have identified because there was a couple of sell to buys there actually that could have defined the range. So could you maybe go into a little bit further detail around that, please?
Let me give it back. There you go.
Yeah. No worries. Let me actually share my screen. I'll focus on that example right there. Give me 2 secs, guys. It was here, right?
Yeah.
Yes. So you're not wrong for drawing the range from this high to this low here, because your buy to sell and then starts to retrace back was this. But at the same time, these are your train station points where we can potentially pick up any sellers or buyers can potentially break through. But these are potential areas that we can see price react from. So when it's a potential area when price can potentially react from, we have to train our eyes and ensure that the range is drawn to the where price can potentially react from. Do you understand that?
So you're saying we shouldn't draw the range from up there? Because then I noticed that. Are you saying that basically if I did that, say for example, price didn't go into that premium, but it went into the premium of that lower buy to sell range you saw, you're saying that price can do that sometimes? Okay, like that, yeah, exactly. Yeah.
So is that because that becomes the 50% of the buy to sell?
Yeah.
As well.
Yeah. So because this area here is unmitigated, right? This buy to sell here is unmitigated, and even this too is buy to sell here. So when price starts to come in, let me actually delete that so a bit clear. So when price starts protecting the lows to come into here, you not see this as a potential reaction point because this is unmitigated.
Definitely.
And we're coming into I mean this, when you draw the range from this high to this low here, you are essentially coming into the premium, right?
Yeah.
But again, a sub range is a price range that can potentially an area where it can potentially react from. This was your buy to sell, and then it pull back. And before let's actually follow money from here. See how the candle went down and went back up, went down and then went back up, went down and went back up, and went down and went back up. So within this area here, this was a sub range here. Do you understand?
Yeah.
Yeah. And then let me actually clear that out. Like when price was coming to here, like you should have mitigated here to continue lower, right? But what did we react from? We got that aggression or that V-shaped aggression, right? So now liquidity was built here, and look at how this now becomes liquidity to be taken, because now all your lows are now getting protected. So what do we see here coming into this region here, this inefficiency here? This couldn't even try to break the high when it came back.
Yeah.
It was trying to, but never actually, it gave more, because now it built liquidity for lower prices. So when price starts to move like that, and you know that liquidity was built for lower prices, can we potentially catch lower time frame mitigations? Can we follow mitigations on lower time frame? We can, because now we got liquidity down here, right? So if you just follow price as once this gets tapped into and the intention has been shown, you know that liquidity is sitting there, and then now lower time frame mitigations can be followed. Do you understand that?
Mm. Yeah, makes sense.
Yeah, yeah. Because the logical part here is, you know, liquidity stat lows are, and all these liquidity sitting there, and look at the aggression that it gave. And then on lower time frame, there's probably entries within that.
Okay.
To continue intentions, like this area here, that you draw on the from the high to the low. This is not this is correct too, but at the same time, make sure that you do understand this buy to sell details that can get met.
Yeah.
So these are
yes.
Yeah. Yeah. So like, for example, this let me change that to color to a buy. For example, this buy range here, like who here did see this during New York? Who saw this buy range here? Let me actually pop that. Yeah, perfect. I did miss. Perfect. Yeah. So this at the buy limit. Nice. Yeah, this again, this was your sell to buy. Like a lot of people will be some POI traders will be thinking that they want to come into this region here, but look at the recent activity that they had. They had the activity here, and they initiate for higher prices. Now, can we see this liquidity getting swept? Because now we can see that momentum shift around this region. I got in plus the scale and entry. Nice one, man. Nice one. So I hope that clears it, to be honest. If do you want more explanation, I'll try to do my best to explain it. Is that clear for everyone?
No, that's pretty good, thanks.
No worries. Nice one, man. So with the people who let me actually use a red one here. Sorry. So for the people who are trying to sell of this region, what behavior do we get around this region here? We did have that reaction, right? But then we're actually fighting against a bullish sub range, the sell to buy. So again, when this, you all know that you should be looking at your higher time frame to see what this taps and the reaction that we got, that V shape, left unmitigated, yeah, V shape recovery, exactly. And leaving that sell to buy.
Use quick question.
Yes.
Is it also a feature recovery if we didn't break? So when I'm observing or looking for a feature recovery, for example, this one, for me, it will be a feature recovery once we BOS this one, or is there already some other feature recovery in that?
So a V shape, like look at this candle here, yeah. You see that candle there?
Yeah.
So if you add this candle here and this candle here, take the open of that, and then take the of that, yeah.
That's
what is
already V shape.
That's a wick, right?
Yeah, that's a wick on high time frame, yeah.
So
Okay.
that shows intentions and intensity of buyers. Like you don't want to see like price is going buy and then sell. That's your, you said a lot of people say it's FU wick. For me, I just call it a V recovery because it just shows intentions. It's a and then I hope that clears it, man. Is that clear?
Yeah, I was more looking in the bigger thing, but also that smaller thing is of course also
the thing. Yeah, the thing is you're not wrong, man. If you saw this whole,
but you can do it smaller.
This is still a V-shaped recovery.
Yeah,
you're not wrong.
Yeah.
Yeah,
Okay.
You're not
Thanks.
wrong. No worries, man. No worries. So for the examples, let me change that. So I did notice a lot of people were trying to sell around this region. You're not wrong. We did see a reaction, but then again, did you guys notice this sell to buy that was present around that time? And in turn, now this becomes your potential liquidity. So when you see sub ranges, you just have to be prepared. And a lot of people would probably like people who like say price hasn't done this yet. People will draw the range from this low to this high, which is not wrong. That is two price ranges that we have, from this low to this high. But at the same time, what was your recent activity that price initiates out? So now you have this pocket of activity. These are just pockets of activity. Even this sell to buy here too, just pockets of activity. Sell to buy, pockets of activity. It's always like a pocket of activity that they tend to leave. And even from that sell point of view that we had earlier, this buy to sell here, that this actually then mitigated this full inefficiency. That was a pocket of activity of sales. And as we start coming back into here, we had an inefficiency, but this was your recent last buy to sell. So that's your pocket of activity. So always try identify most recent pocket of activity. Yeah, that's it. You only apply the sell to buy as a weight. You only apply the sell to buy as a weight at high time frame. Low time frame just a range. What do you only apply this? Sorry, Guy. Can you clear that up, please? This sell to buy wick. There's low time frame range. Sell to buy wick. Sell to buy wick at higher time frame equals lower time. I mean, you want to see what lower time frame in this? Let's actually see it then. Let's actually see it, so we know what it is. You just see an intense of buyers coming into that region. Actually, let me was it 15-minute? Let me actually highlight. Let me box this here, right here. You can see how on the 1 minute how price is moving around that time. Yeah, look at how price moved away, broke out, full inefficiency, left a sell to buy, mitigate, and then moved away and kept protecting this range bar here. So this was that V shape that you had. That's your 1 minute price movement on that time. Yes, the V. Yeah, I hope that clears it. So always try and identify the most recent pocket of activity. Yeah, so the most recent pocket of activity, like ideally, the most recent one is, the best ones are when it starts to momentum. Like for example, this here, when liquidity was taken, we had a aggression coming out when it tapped into that region. inefficiently filled. Now this range bar that was left, not a lot of people will probably see that. Create that range, that sell to buy range to mitigate, and they kept protecting this. And this range bar that they create, they broke out liquidity for that. You could potentially take this whole sell to buy here too. You can't see it properly. Even this too, liquidity for higher prices. Ideally, if you do want to take your recent pocket of activity is after a momentum shift. Let's actually get a better example. Oh, interesting. This current price. Yeah. Damn, interesting. So this is a perfect example of your buy to sell. I got edge money and then drop. Yeah, edge money then drop. Exactly. You got it. This aggression that came, look at this liquidity that was built for lower prices. So, I mean, I'm guessing this intentions here are just to continue. I don't know what's actually happening around here yet. Haven't really done anything. So, yeah, I mean, once you see this aggression and you got a void here, can potentially fill for lower prices. I see this, but still difficulties to enter. Currently, tells nice one, Henry. Nice one. This is crazy. I mean, now this looks like can become liquidity. Where are we? What's actually happening?
Use. Can you show on
Yes.
that on a recent price level what the sub ranges are and what the, like, for example, now what the buy range and the sell range is and then what the sub ranges are? Can you go over that?
Yeah. So let's actually
Maybe
go
it's
on
a good
higher
example
time
for
frame.
the guys as well.
Yeah, let me go on a higher time frame. All right, this I'm gonna go on daily. All right, let me delete this.
Who is that yellow
So-
or gold color? Can somebody delete that as well?
Yeah, let me actually try to remove that. I can't remove it. Oh wait, I can. So
Perfect,
your high time frame sell range, as we all know, is this. We came into this money again here. Your question is, are we going to potentially see a momentum shift around that region? And we obviously did. And your buy range at that time was this, and we came into this region here. So your next potential buy range is this whole thing here, your sell to buy. We come into somewhere in here, but this is not clear yet on a daily. So what I do is I go on a lower time frame to clear out where my next pocket of activity is. So this is perfect. Yeah, that sell to buy here, your pocket activity here. This is your sub range, and this is your another buy. Oh my god, sorry. This is your sub range here, and this is your another buy sub range here. So this is your current activity here. My question is, are we going to potentially see a momentum shift here, or are we going to come if you want liquidity for this sell to buy here? That's my question. Because if we're protecting the region here, we can potentially start targeting higher prices. So do you guys understand that so far? So let's actually dive deeper. So basically coming into this region here now, you've actually got liquidity for this region here. So I want to see, I'm calling myself nice. Yeah, I want to see the behavior when it comes to this region. But at the same time, I am aware of this liquidity that can get targeted for this. Can we see potential momentum shift around this region and this region here? So your sub range of it, let's take it from that 4 hour, be better. Yeah, this was just, let me actually draw it on the thing. So sub range. Yeah, so those are your potential sub buy ranges on the higher time frame. This is knowing your where you are to make sure that you understand. So I'll scroll through time frames, and oh, this is looking interesting right now to see where, like, sorry.
And it's interesting because you're in an area where a momentum shift could occur. Is that what you're saying? Okay.
Yes,
okay,
exactly.
Because it's the open of the
Where,
range.
Yeah. So
okay, yeah.
that's why I find it interesting, because, like, am I surprised that this short is coming through? Like, look at the liquidity that I built and the void.
Liquidity,
the
exactly. But now at this region, at this range, you want to see what the open is gonna do.
Yeah,
are you gonna break it?
Yeah, what's it gonna do? And are we, if we are gonna go lower, are we gonna protect this sell range here to go lower? Yeah. So does that clear it, or do you guys understand that so far?
Yeah, for me it's clear. Thanks, bro.
Sweet. So yeah, so now we're actually coming to the potentially buy range region here too. So my question is, when we look at the lower time frame, are we continuously protecting all the highs? Like, this high is protected, and my question is, are we gonna start initiating price out, or in turn now this becomes liquidity and this void here, and this is actually liquidity to potentially mitigate here too? Like, I'm asking myself that consistently, or are we just gonna come into this unmitigated buy to sell here and momentum shift here again to continue? These are the scenarios.
That's now the pocket money, the most recent pocket money, right? This year.
This is your most recent pocket money, right?
Oh,
right
even
here.
Smaller. Wow. Okay.
Yeah, because you can see that buy to sell, but again, you have to identify this too, what you just drew.
Okay.
You understand? Yeah.
Yeah.
So when price does potentially come up into this region here, what do you want to see? You want to see the intention to continue, all the highs getting protected. But again, what is price gonna respect this region to continue lower?
Yeah.
Like, so these are the questions. So basically, everything's a price. Yeah, everything is a price range.
Yeah,
exactly.
And that's where my confusion is. Like, which price is the one you are focusing on or you're taking? Because, like, everything is a price range.
I mean, this is your current move right now. Why are you looking at this? This is something that you should be aware of, right?
Yeah.
But where are you right now?
Okay.
So these are your current plays right now. But if this starts to initiate out, you want to see this now. What activity here? But again, this is liquidity for higher prices. So if this causes a momentum shift here, this is another range then you have the whole price range that you can target the low again if momentum shift occurs around this region here. So you can actually, what kind of R you can take already from this high here to this low. So since we're in this pocket of activity right now, are we going to continue lower? That's my question. I mean, we're coming into 10 New York close now. So agree, that's how I see it. I hope that actually clears it. I actually don't want this to be that long, to be honest, but I'm gonna go over take profit at the edge of it. Yeah, exactly. If you're happy with the, honestly, if you want to take profit, it's up to you how you want to take profit. But if you see all these highs are getting protected, if you want to continue to see high getting protected, you can just target the liquidity. You can start carrying it to the next region where price can potentially target. So where is your next region of liquidity? Are we gonna potentially hit this region here, we can definitely, because this is just avoid trying to get filled. So let's see all the highs get protected. Yeah, exactly. Yeah, I usually do it too, man. 100%. I do it too. I usually TP around that region. Okay, so let's actually go into sessions, how they interact with each other. So as you guys can see, the red box is New York, green is London, and yellow is Asian. So how sessions interact with each other is very interesting too. How they grab liquidity. Look at, for this example here, this was your last Asian range on Friday. How price Asian came back, and London Asian push price because liquidity was built here, and London grabbed the liquidity to then start targeting liquidity built from Asian, New York, yeah, and your London, which is interesting how they interact with each other like that. So look at how price moved away, target. So Asian low got targeted. Asian low got targeted. Now you can, when in EU or just EU in general, when you see Asian low get targeted and you see a V shape, and then your lows are getting protected, potentially your Asian high comes to your next target. So look at how that gets targeted, and they left that sell to buy, and liquidity up here got targeted, protected the low again to continue higher. And now the effort here, look at how the London order here interacted with New York, and that caused that aggression. New York was a funny one, but it was still tradable, and New York managed to build its own liquidity to continue higher. So my question is, are these New York orders that they built here, are we gonna potentially see a shift to continue higher because they built liquidity for higher prices already? So yeah, I hope that makes sense in terms of how sometimes New York ranges for hours. Yeah, they do. I mean, the reason why we see that range is because London has made a move already, the short, then London bought back up, and it's made quite a huge move already. So do expect when they do make like above 30 to 50, expect say London moves like 30, and then say New York, Asian moves like 30 or 40, and then London moves like 30, 40, expect New York to range. Or when Asian moves like 50 pips, and then do expect London to range for like 10, 20 pips, and New York will just continue to move for the next 30 to 50 pips. So these are the things that you have to be aware of. I hope that clears up everything. If you have any other questions, just throw them in on the question box or the private FAQ if you want any more clarity. But I hope everything is clear now for you to start seeing these sub ranges and play them. Sweet. Guy Ling, I know you see them. Yeah, that's about it, man. Just gotta train the eyes. Exactly, Nick. Just gotta train the eyes, man. Exactly. No worries, man. No worries. Just trying to make sure that everything's cleared up. You guys are asking the right question. Been slipping back into honestly, the previous education, you have to just try to push it back, because when we come into like any like new education, we have like too many W's new yeah, try to block it out, man, because
you want to be a clean slate.
I don't know a clean slate is a better to receive information, because you don't want that clash of information.
Man, but at least it's not like retail knowledge. At least it's not like trying to push.
yeah, we're not trying to not there's no trend line here. It's just purely just logic, man. I'm nothing else, man. Like
Exactly.
be as logical as you can with this, because once you know how to use logic, you can just apply it. I think I'll give you guys another tip. If you do, once you start understanding it, you start to realize that you can you start to see how price moves, and then you're like, oh, I can you can start like labeling it your own thing, like say, I don't know, something like an analogy to like life or something, like price flow like a river or something. I don't know, something corny like that. But something so you can make it like digestible for yourself, for you to understand that, like
Exactly.
yeah,
Because we came up with our own terms, as in like whatever helped us understand these things. As in like no one's ever really explained edge money or flow mitigations and stuff like that.
Yeah, like sub ranges and like fresh mitigations. And
yeah, so whatever you
these
guys
are the
like,
things that these are the things that made sense to us when we're seeing all this happening, because we didn't realize that we honestly did not realize how price moves like that. Yeah, and then it moves like that too, and then in Asia we're always we're expecting this here to get targeted, but not realizing that a pocket of activity has been created. So this was your next recent activity. But again, understand that this is from a narrative point of view too, where you continue your fresh flow mitigations. So
be one with the price.
Yeah, be one with the price. Yeah, exactly. So I hope that clears everything, and thank you for joining, and we will see you on Wednesday. Please do try your best to send any markups or anything just to clear things out. And yeah, let's kill it tomorrow, man. Let's kill it the whole week, man. These prices looking very interesting. So let's see.
Exactly.
Nice.
Thanks, boy.
Sweet. No worries.
See you. Speak to you on Wednesday.
Appreciate it. Yeah, no worries.
Catch you guys later.
Have a nice one.
Thanks, fellas.
Yeah,
Cheers.
you too.
Ciao.
Yeah, have a good evening, guys.
You too, man.
Thanks, guys.
You too, man.
Yeah.